I won't stop till I hear him say,
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. Very interesting technical analysis, fully diluted breakdown here for you guys in today's video breakdown. We are going to be covering identifying institutional intention. We are also going to talk about understanding where retail liquidity lies, using that in tandem with take profit areas and how to trade against the retail herd. We're going to talk about keeping in mind what we want to do as retail investors, right? With barely any information about what the market makers are going to do in advance. We want to be looking at trading in tandem with the banking institutions from bank and institutional areas of interest. How to identify those by paying attention to structure, paying attention to key and realistic patterns that the market makers print to give us a bias on what their intentions are going to be at in the market via how they are grabbing liquidity and shifting the market. Okay. So first I want to take your attention over here, guys and gals. If you have been paying attention to this YouTube channel, this is the pattern that I teach you guys to identify. You need to be able to draw this out in your sleep. You need to understand that the market makers are the only people with the amount of money to move the market this way. This is the market makers manipulating price to grab liquidity from an area of interest, i.e. lows in the bullish scenario. If we are going for a bearish scenario or sell positions, it would be the same thing as above, so below. We're looking for the market to grab highs before it moves lower. Okay. But so for this scenario, we're going to be looking at this pattern. How to identify it. We're looking for a move beneath lows. We're looking for the market to break a previous market structure high, whether that's a fractal high or a higher time frame high up in this general vicinity. And once that happens, we have to understand who's behind this type of move. And who's behind this type of move is the big money, the smart money. So when this happens, we know that once they create a significant higher low above that sweep of liquidity, we are in the green to generate a proper RR. And the ideology surrounding that the market makers need to add to their order, they can't just flood the market with one institutional order to push the market in their favor to where they seek to allocate and take profit from the market. Okay. We know that over to the right-hand side somewhere in the future, they are highly inclined to add to that position. We as retail traders are seeking to give ourselves an edge in the market. Remember, nobody knows where this market is going to go. Our job as retail investors is to create a can't lose scenario, right? So that is what we're doing here at CYPRX. Although nothing is guaranteed, this gives us a higher probability trade setup, minimizing risk and maximizing your reward. Okay. So what we're looking to do is enter over here to the right-hand side based off of our Fibonacci retracement tool discount. I've told you guys multiple times that you guys need to seek to draw your Fibonacci tool from the higher low that sets itself in place after the sweep of liquidity that leads to a market break in structure. So for this scenario, it would be something along the lines of this low to the high. Once the market gives you at least a 25% retracement, that gives you the green light to go ahead and say, okay, this is a potential start to a pullback where I can seek to add to the position that the banking institutions scaled into the market, right? And we're looking for a price retracement down into at least the 62 to 79 to 100% discount for the price to then return and appreciate in value. Again, this is how you define a proper RR setup based off of pattern identification and based off of a couple of things that I'm going to teach you in this market. Okay. So pay attention again, smash that thumbs up button if you guys enjoy video breakdowns like this. First, I want to take your attention to the 15-minute chart. This is what really set up the foundation for this trade, is being able to identify where the bank and institutions manipulated price and then purchase from. I've told you guys multiple times that during every single session, there are two main positions that you need to pay attention to that the bank and institutions either bought or sold from, and how to identify them. So what we're looking for to identify these areas of interest, i.e. on the 15-minute or the hourly, are where banking institutions manipulated price into discount and then created enough momentum in the market to break previous market structure highs. So for this scenario, right, if we're on the 15-minute chart, this black structure right here is 15-minute price action. This area right here would be 1. We have a pullback and we have another price manipulation move down into discount, and for the banking institutions to allocate funds back into the market to boost the market back to the upside. These would be the two areas of interest that we're looking for. Why? Because they have the criteria. They meet the criteria. They violate lows and they lead to market breaking structures. We know that on the trail and the move up, there would be internal liquidity here. We see the market violate a low. and then break previous market structure again. So these will be the two significant areas, i.e. this is 15-minute and hourly structure that we're going to be looking to identify. So now let's take that knowledge to the charts, okay? We see down here, look at price action again. This is the 15-minute structure. We see a bearish push during the manipulation window on London session. We know if we were to copy and clone this New York manipulation window over to London session, we know that prior to every single session, there is a manipulation window. Well, look at this. The market makers were doing what during London session? They were constituting equal highs, retail resistance here in this area. Look at this. Here's an M formation. Again, something that we trade against here at CYPRX. We know that retail traders will be looking at this as some type of resistance block or some type of inability for the market to push above this. However, we know that fractal structure is telling us that the market makers are grabbing lows and having and showing us the willingness to make highs. So with that being said, we're going to tune in, we're going to fine tune ourselves with what the market is telling us. Again, when we're talking about identifying institutional intention, if the market makers are consistently, again, guys, ask yourself these questions. If the market makers are consistently sweeping lows and making new highs, what does that intent tell you? What does that institutional intent tell you? It tells you that they have no interest in targeting lower price action. Well, if we also know that the banking institutions like to target liquidity, then what does that mean, guys and gals? That means that once the market shows you a willingness to make new highs and make new higher lows, they are then giving you institutional intention by telling you they want to attack highs. If you want to get in on these moves, you need to start identifying these institutional patterns. So going back to the charts, what do we see? i.e. 15-minute, okay? Let's really dial in, guys and gals. Here, we see an A to B move before the market pulls back during London session that broke previous market structure 15-minute highs. Okay, you guys can see here during the London manipulation window, we see two institutional highs, or let's just say two structural highs. We know the institutions are the only people with the amount of money to move the market like this, so we'll just call them institutional highs. Okay, but we see highs here. We see this entire price leg violated the previous price high. So we'll jump down to the lower time frame just so that way I can show you guys that fractal price action. Let's go to the 5-minute. So we can verify that this market pump, okay, again, here's that low during London session that broke a previous market structure high. We can classify this high as a lower high in comparison to this one. And this entire price leg did what? It violated that structure. Okay, now what happened down here in this area, I want to take your attention to, again, pattern identification. We'll go down to the 1 minute to show you all what I'm talking about. Being able to identify this one single pattern, either on the higher time frame or on the lower time frame. And I've told you guys multiple times that if you can correlate this pattern with the higher time frame along with the lower time frame, it is a much higher probability that a trade is going to go in your favor if you can correlate the higher time frame with the lower time frame. So guys and gals, tell me please what you see here. Exactly what I'm attempting to teach you guys. We see a low violated. Now again, pay attention. This is exactly when price breaks out of the manipulation window. What do we see here? A double bottom formation. Guys and gals, the CYPRX exclusive is not only that we teach you structure, but we teach you specific times in the market via specific trading sessions that all of this stuff happens at. And that's a key ingredient that people don't really truly understand about the market, is all of this stuff is manipulated through time, okay? Through different sessions, right? Specific areas that they seek to target in the form of liquidity, okay? So anyways, we see the pattern here. We see a low get violated fractally. We see a high get violated, and then we see the market start to create higher lows. After that, here is the institutional pattern. The market makers manipulated price by building liquidity, giving themselves discounts, sweeping that liquidity that they manipulated. This is called pre-engineered liquidity in the market, and then gave themselves discount to buy price. Then they took profit to give themselves discount again, put in more buy positions to add to their overall order. We know even in the sense of the fractal nature of things, they cannot just put in one order. They must consistently scale in and out of their position, driving the market, creating these higher highs and higher lows that you see in the form of what retail traders like to call trend lines and all these blah, 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 blah. Okay. You guys get what I'm saying? So here was that first area of interest, A to B on the 15-minute chart. Okay, where we can highlight this significant area of interest as the first order that the banking institutions for London session bought from. We know that during the next trading session, i.e. either during New York or the next Asia or London session, we utilize the piggyback methodology. When we can see higher lows or areas of interest where banking institutions bought from previous days, we know that the next day's worth of price action, banking institutions are highly inclined in the form of sensitive areas, most likely going to buy from those areas if they fail to break and close below them, right? So with all that being said, that's the first A to B move. Same thing, I'll save you guys the spiel. We see another pullback and another A to B move that breaks a previous market structure high. This is the second market structure high that was created during the London manipulation window. And this A to B move, I will scale out this price action for you guys so you can see it from A to B, violated this high. We have a decent pullback. Then we have another A to B move that violated a previous market structure 15-minute high. So now again, confirming the ideology that I give to you guys, that banking institutions put in two main orders during their session, every single trading session, that you need to be mindful of and paying attention to. What constitutes, what gives us the validity that we're not looking at these higher lows or these higher lows or so on and so forth? What gives us the confluence? The confluence is this pattern right here. We see a violation of a low. We see a fractal break in a market structure previous high and higher lows created after that. Well, that happens fractally in both of these areas. I'll even scale down to this position for you guys just to show you the proof is in the pudding. Check this out, 1 minute time frame. And it just so happens to be, guys and gals, when we enter into the what? The New York session manipulation window. Look how accurate this is when you can really pay attention to it, and pay attention again, because this is going to drive why we were drawing our Fibonacci from this higher low right here. Okay, so if this is the higher low on the 15-minute that swept liquidity, i.e. beneath this low, and created a new market structure high, then what makes this higher low more significant? Again, this on the 15-minute chart right here is the higher low, i.e. the second area of interest where the banking institutions during London session bought from. Paying attention to the ideology that we want to pay attention to the higher low after the sweep of liquidity. So now fractally, we can see and do the same exact thing. Guys and gals, look at this. The market structure enters in to the New York manipulation window right at 3 a.m. Pacific Standard Time. We sweep a low right here. You guys can see that an intermediary low is formed into the market. I'll even zoom in. Okay, a low is swept. So here's the structure right here, a low, low swept, new market structure high. Guys and gals, here's the pattern, boom, right there. Okay, then what does the market do after that? It creates a higher low after the sweep of liquidity. Okay, if you're still following along, I know that this is valuable information for you guys. Pay attention, this is insane. So not only do we have a higher low after the sweep of liquidity on the 15-minute, which is this general area, we also have the market coming into the manipulation window during New York session, and we also have a fractal higher low after the market sweeps liquidity. So again, we're seeing institutional interest to grab liquidity from lows and make new highs. Now this is the most significant higher low, in addition to the significant higher low after the 15-minute area of interest that we can see fractally. So this is where we took our Fibonacci from, again, paying attention to the higher low after the sweep of liquidity. Now let's go into the overall trade breakdown. Retail liquidity, understanding trend line manipulation, understanding New York session manipulation, and understanding that the banking institutions must first go lower before they go higher. So we'll go ahead, we'll clear out the Fibonacci tool, and we'll zoom into price action during the New York session open. Well, guys and gals, I don't know about you, but I teach our students here in the CYPRX trading community to trade against retail methodology. If you go and you research any trend line trading methodologies or any trend line trading mentors, what they attempt to teach their students is that the third touch of a trend line is the most powerful touch. Well, would you guys and gals look at this? Right here, we see the third touch of a trend line. 1, 2, 3, where we can imagine over leveraged retail investors are FOMOing in out of the mouth, trading this trend line with over leveraged positions and scaling into the market here on XRP, thinking that this market is going to pump. Well, what do the market makers do? They know and understand that retail traders are flooding in the market with all of these positions. We also see that positions start to formulate during the what? The manipulation window, which is again key. The market makers come back for all of that liquidity melting straight through it, and then they take their bullish move. Now I want to show you guys why it is that we were able to scale into this position here at these lows. Again, when we see this pattern, and I'll zoom in to show you guys what all of our confluences were. So we have already the two 15-minute areas of interest. This is correlating a higher time frame bias with our lower time frame analysis, which again, as retail investors, we are seeking to give ourselves the higher probability setup. Well, we have two areas of interest on the 15-minute. That's going to be our higher time frame for this scenario. Areas of interest that the market could potentially come down into in the form of discount based off the ideology that the banking institutions during New York session are not going to buy from a high. Well, when we see price get passed over to New York session, what is it doing, guys and gals? It's operating at a high. So what are they going to do? They're going to manipulate price to give themselves discount to then take buys from where London session most likely bought from in the form of their discounted point of view. So those two areas I showed you guys already are 1 and 2. I showed you also how to identify those areas of interest, and you can do that for every single session in a bullish or bearish scenario. It does not matter. As long as you have those perimeters where you see the market sweep liquidity from lows, fractally break new market structure highs, i.e. as above, so below. It would be the opposite if you're in a bearish scenario or a sell scenario, but you're looking for those market structure legs to break previous market structure highs on the 15, and you're identifying those and extending those over to the right-hand side to see if New York session can respect those areas in the form of discount. Well, guys and gals, look at what happens when I zoom into the charts on the 1-minute perspective, and I show you all what happens when you take your Fibonacci, again, which is a tool to gauge where future price action is going to put itself in the form of institutionalized discounted opportunities, because we know that the banking institutions cannot just buy price once. They have to scale into their position multiple times. Well, guys and gals, here's that higher low that we identified after the sweep of liquidity that entered into the manipulation window. We see them build up internal liquidity, taking our fib from the higher low after the sweep of liquidity and extending that up to the high all the way over. Once price starts to retrace at least 25%, we can see how the market pulled back into 70 to 79% discount, and they added to their overall position. Now, not only do we have higher time frame areas of interest that this is correlating to in the form of discount, but we also have fractal. We also have what? Logical retail liquidity manipulation. We have trend lines that we're trading against, right? Where retail traders are doing what? They're buying from these trend lines. We know that the market makers need to dump price and take it lower before they can be comfortable enough to buy price again, okay? Once they buy price, then what are we targeting? Showing us a willingness again to grab liquidity from lows, make new market structure highs. Guys and gals, it's really laughable. Here's the pattern again. We see a low. We see that low violated. We see fractal market structure highs. We see a higher low that leads to a market continuation. The pattern never stops. But what are the market makers targeting now? Again, look at this methodology. Here is a trend line right here. Highs, retail traders are selling from. Highs, retail traders are selling from. Oh, would you look at that? The third touch of a trend line, retail traders are tripping out right now with over leveraged positions, attempting to sell XRP, guessing tops based off of retail methodologies, and they're getting annihilated. Market makers know that. Here at CYPRX, we attempt to trade against that retail methodology. I hope that you guys took some gems away from this XRP trade breakdown. This was a beautiful 1 to 3 RR. Again, what we're attempting to do here in the market, I've shown you guys time and time again, is scale into positions. I even mentioned to you guys on Twitter, if we go over to my page, if XRP holds bullish pressure above 28.5 cents, we will most likely see a temporary bullish push into 47 to 50 cents. I'm still not screaming the bottom is in until we break 65 cents, May highs and 77 cents, April highs. I also said to the CYPRX students that I'm going to be looking for intraday positions on XRP, where I'm going to be looking to scale in and out of positions, taking profit. This is me doing just that, giving you guys a fully diluted breakdown. I am fully closed out of this position. I took partials at around the 50% Fibonacci extension. Now, again, the logic surrounding that ideology. What do we see over to the left-hand side? Guys and gals, I cannot make this stuff up. If you guys are here, smash that thumbs up button. We target retail liquidity. Well, what do you see right here in the form of a double top formation where you can imagine what exists above these highs? Retail methodology traders imagining that there's some type of resistance here in the market and they were selling from these highs. Well, here at CYPRX, we were shown an institutional interest for the banks to do what? Grab liquidity from lows and make new highs. We're on a journey to awaken individuals to show you that you can move in tandem with the banking institutions by understanding what their institutionalized interest is in the form of liquidity and other liquidity targets. Blessings to you guys. I hope that you guys enjoyed this video breakdown. Smash that thumbs up button. It helps boost the YouTube algorithm. If you enjoy videos like this, comment in the description down below. We do appreciate the feedback. Really do appreciate the love and the support. As always, you guys be blessed, stay cognizant, be aware. And as always, I'll see you guys in the next video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh.